Recording in progress, we're about to start. All right, so welcome to class. We're going over back testing. Okay. Back testing is the process of looking back in time, looking at previous price history, testing out different things, and then seeing what the results would have been. And then you can use that information to then create a potential strategy going forward, right? So the different ways you can do it through certain websites and softwares that will allow you to run those tests automatically, where it's automatic. You press a couple numbers, and I'll show you this. Where you put a couple numbers in, or you put your input, run a thing, or run a test, you get an output, right? You can also do manual back tests. All right, so I'll show a simple example of that. Something like that could be as simple as saying, hey, let's see what happens if you buy Facebook on the daily every time you get a bullish MACD cross, right? And so what I would do if I was testing this out is I would just list out where those bullish MACD crosses happen. All right, what's a bullish MACD cross? That's just when you have this blue line on the MACD, which is here. So I'll close the RSI to make it easier. When you have this blue line on the MACD crossing over the orange line, right, the bars will also flip to a dark green. So that's a bullish MACD cross. Okay. So back testing is you literally just looking at that and saying, okay, if I bought this, you create your rules, right? So you could say if I bought MACD crosses that are bullish, sold them when the MACD flipped back bearish, what would be results? So for a simple example, for this case right here, you would have bought it here, right? The close of this was 210. So you would have bought at 210 if you bought near the close. And then you would have sold on the bearish crossover, which is here. And this close was 215 or 214.99, right? So you would have made about $5 in profit. If you bought shares, you can also use this measuring tool. You can do the math by hand, of course, but you can also use the measuring tool and see that it took 32 bars for 44 total calendar days.
Tell me exactly why you think people are trying to kill me.
We get that co-host action. Thank you. So that's how you measure that out, right? And so you can see your potential gains, right? So that's how you would go about a manual back test. The way I've done it in the past is I've actually just sat there and wrote it out. And of course, you can make these things more intricate if you want. So you could do that and say, what if my strategy was just a manual back test, right? You could do that where it's just like the MACD cross and test that out. You could take it deeper where you say, okay, I'm gonna do a MACD cross as my purchase, but I'm only gonna do a MACD cross when the stock is over the 200 EMA. All right, so what does that do? That's going to automatically put you where the overall trend or the longer term trend is bullish. So that way we're trading in the direction of trend, right? And you have different ways of looking at trend, different ways of figuring out what trend is for a short term, long term. So something like a 200 EMA will be more of a longer term trend, right? You're taking 200 candles and you're doing an average of those 200 candles, and the EMA puts more weight on the recent candles versus earlier candles. SMAs do them all the same. There's tons of different moving averages, and that's all part of back testing too, where you can go and say, okay, the 200 EMA, to show it, I'll put them both on here just to actually show. So if we throw this, I believe this would be a 200 SMA, right? So look at that. You have the yellow line, which is the 200 EMA. You have the SMA, which is the blue line, and that's the 200 SMA, right? Completely different lines, completely different moving averages, right? So if you're trading a system or a strategy that's dependent upon these indicators, then testing these out is something that you would want to do. And you would want to look at the comparison between these two. Because if you're trading a strategy based off of prices relation to these moving averages, then right here, right, you might get a valid buy signal because this around this area price is still over the 200 EMA, but it's under the SMA, right? So if your strategy is based on first step is based on the SMA or the EMA, then you could have two completely different signals firing off in this area depending on your other components of your strategy. So we can do stuff like that. You could do something where you say, all right, I'm only going to buy on a MACD cross, which is a bullish signal. That's when the stock is above the 200 moving average or the 200 EMA or SMA, right? You would test it out. But you also say, hey, you know what? I need the RSI to be over 50 as well, right? So now that's going to eliminate what adding these extra stipulations and rules is going to do is it's going to eliminate extra signals and it's going to strengthen the validity of the ones that you do get. Because instead of us having just one thing that's showing us a bullish potential or a potential bullish move, now we're looking at multiple things lining up, right? We have a bullish MACD cross. We have a stock that's moving bullish overall in the longer term trend, right? We have a stock where the RSI is also showing upwards momentum and buying, right? So we're stacking these things up, okay? Another one that I like to do, and these, I'm just showing you different things that I've done in the past when I do manual tests. Another one I like to do is look at a Bollinger Band with a standard deviation of 3, right? So normally the Bollinger Band has a standard deviation of 2. I'm gonna change the colors to kind of just point that out so you can see the difference. I'm making you a co-host. Thank you. All right, so I'm gonna go ahead and make the colors a little different. So we'll see white for the 3 standard deviation, and then we'll leave the other ones blue. Okay, so now you see that with the regular Bollinger Band, the typical strategy is, you can play the bounces or the rejections up and down. I mean, you're usually expecting it to come back to the 20 SMA, which is in the middle, that basis line, or you could trade it up and down within that range, right? And I should take off the third one. So that's how it normally goes. But what you'll see is a lot of times that it'll also walk the bands down or walk the bands up, right? So like this, if you were trading a strategy that was simply, and this is why we add criteria to our strategies, and we're not just trading a lower Bollinger Band touch. We're not just trading an oversold RSI as our buy signal or a bullish MACD cross. We're not just trading that one thing, but we're going to use multiple things. If you're trading an indicator-based strategy, you're going to stack them up so that you're having the most bullish signal you can have, right? So when you see stuff like this, you would potentially be taking losses on this because you're buying it just because at the bottom. When it touched the bottom here, it bounced. Touched the bottom here, it bounced. Right? But when it touched the bottom here, it bounced. But when it touched these bottoms, it didn't bounce. Right? We see it just coming on down. It touched the bottom here and it comes on down. This bottom, come on down. This bottom, come on down, right? So that's when I flip over here. I throw on a 3. Now you see with the 3 standard deviation Bollinger Band, we don't see the bottom touch here, right? But what we do see is more often than not, when it hits a bottom, it's definitely more likely to bounce off of this, bounce off of this, bounce off of this, right? And so this is all stuff you can test, right? And so what I would do is I would run back to, a year's worth of data if I'm looking at something like this, and I'll say, okay, for the sake of this, training, I'm just gonna do this little spot right here. But like, okay, if I'm playing just off of touches of the lower band, where would I be buying in that? Right? That would be a buy. This would be a buy. I buy there. It touched it here and here, right? And I guess you can count this, but this was an earnings drop. So realistically, you wouldn't trade that one because it was an earnings drop. But that's how you would have your entry signals, right? So of course, after that, you also are going to need to create exit signals, right? So we can do different things. And this is where that testing comes into play. You can say, okay, my buy entry is going to be a bottom touch of the 3 standard deviation Bollinger Band, right? But my sell might be when we touch the top of the 2 standard deviation band. And so you can literally test it out and say, I would have bought here, but I wouldn't have sold this until here, right? We would have had, if we were buying shares, we would have had a losing trade just by a little bit. You can measure that out, of course. You would have bought it here and you wouldn't have sold until here. So you would have lost, what's that, about 3% over the course of a month if you were swing trading that, right? You have your entry here, that would have been a win, right? You got in here and you sold it here. That's a 10% gain, right? 10% gain in 11 days. You would have got in here as well. I didn't mark that one off. But you also would have sold up here. So we have one loss, one gain. You got in here, and like this is where you would start writing these things down. You entered here, and then you sold when it got to the top of the 2 standard deviation Bollinger Band, right? 12% gain, 30 days, right? The market averages what year over year? 10 to 11% is the past average. That's 12% in 30 days. This one was 9% in a couple of days. This one was a loss of 2%, right? So just looking at stuff like that, and this one would have been a loss as well, especially if you traded it into earnings. But again, if you start looking at risk management, you probably wouldn't hold into earnings. And that could be something you put into your strategy is you're not trading earnings, right? So when you're looking at stuff like that, that's literally how you can run a manual back test. And you can create these strategies, you can test these strategies out, you can see what makes sense, you can see what doesn't make sense. And so that's how you do it, right? So what I would encourage you to do, if you want to do manual back tests, then you can pull up different indicators on TradingView. That's an example of one you could do. You can pull this up with any stock. And that's the thing when you're testing out indicator-based strategies. I'm gonna get my lines off of here. All right. I'll put them all back later. So when you're doing an indicator-based strategy,
I understand the swing and the scalping and day trading, but
thank you. Yeah, if you got any questions, put them in the chat, and then we'll go through and address them. So that's what you're doing, right? And you can do that, like I said, with MACD. You can do it with Bollinger Bands. You can do it with RSIs. You can do it with moving averages. You can shift and change all the numbers, right? And when you start doing that, that's when you kind of do want to do something that runs it automatically for you. So you're not sitting here and having to go and say, what's the entry? What's the exit? What's the entry, right? But doing something quick like that, where I'm saying, touches of the white band will be entries. And this is why I do mine like that sometimes. It's just because it gives you a quick visual. I don't have to go run and set up a scanner or something. But even if I say that's the entry instead of here, it gives me a quick visual of what the potential is. And then when you're creating these strategies, right? So entry here, exit here when it touches the top, entry here. You wouldn't have exited till up here, and this would be swing trading, right? So all that to say, you can test these things out and see if there's something that you can make sense, right? Strategies that you see are all because people tested them out to see if they were viable strategies. And this way you can test something out in the past. So if we see that we run this test and it proves to be a profitable strategy, or a strategy that's profitable and has a high win rate or things of that nature, then you can go on and say, okay, I see that the past 5 months, 6 months, trading the buy on the breach of the 3rd standard deviation Bollinger Band and selling when it touches the top of the 2 standard deviation Bollinger Band would have been an 80% win rate. Average trade was 10 days. Average profit was 5%, 15%, whatever. If you got an 80% win rate strategy with the average profit of 15% on the trade, that's a solid strategy that you can continue to run, right? Understanding that you're going to lose sometimes, yeah, but overall, you're going to end up profitable as long as you're not, risking your whole account every single time, because you have to factor in for certain losses that can, wipe out a big chunk of your account. And it's always harder to rebuild because for a 50% account loss, you need a 100% account gain to get back to break even, right? So that's just a quick rundown on manual back testing. I'm gonna go ahead and pop in the chat real quick, see if there's questions. If you have any questions about manual back testing, throw them in the chat. Another cool feature on TradingView, and you can do back testing on TOS. I don't use TOS personally, but on TradingView, you can also hit, if you have the upgraded version. And if you need the upgraded version, there's a bunch of links in the chat. But go to Trading Apps, number 2 under Start Here, and you can get that. So TradingView will let you go back in time, right? And then you can actually replay the candles and just see how it would have played out, right? And so that helps you as well, looking at where indicators are going, where's price going. So when it comes to your exits, and it's something else, I've been testing strategies with this too. You don't have to do strictly indicator-based exits. So this is again where back testing is for if you really want to get in your bag and you really want to create a strategy that has simple rules and proven historical success, right? So you can say, okay, I tested this out, I tested that out. I know that it's profitable when SPY is above the 200 SMA, and I do the Bollinger Band entry, right? So I'm buying off the lower, the 3 standard deviation Bollinger Band. But then what if your way of doing a take profit and stop loss is percentage based, right? So what if you say, okay, I'm buying off of that, and then I'm gonna have a 2% stop loss and a 4% take profit, right? And so that itself could be a way of you measuring out how you're gonna take your trades and how you're gonna manage your positions, where you start setting stuff up like, cool, I'm gonna have a 2% stop loss, I'm gonna have a 4% take profit, right? So if you entered that trade here with a 2% stop loss, 4% take profit, that would have been a winning trade. And when you structure your trades like that, you can have a win rate that's less than 60%, you know, and still be able to be profitable. You don't have to have a 90% win rate, because if every time you win, you make $2, but every time you lose, you only give up $1, you can still be trading with 60% win rate and make money and be profitable. And like I always say, at the end of the day, that's what we're here to do. Right? We're not here to try to win every single trade, no matter what. Of course, that's nice, right? But at the end of the day, end all be all, the goal is to make money and be profitable, right? So that's different ways you can structure it out. You can structure it out where you say, okay, this is my entry, right? But my exit is going to be based off another indicator. I'm going to enter off the lower Bollinger Band, but I'm not going to exit until I have a bearish crossover, a flip from bullish to bearish crossover on the MACD. So we're already bearish. We go bullish here, and then here we flip back bearish. Then this would have been your exit, right? And so you would have made profit from here to here, right? And maybe you still imply a 2% stop loss, right? So that's where you start to set all these rules up. And that's why I just love back testing so much. And I am about to get to the chat now. But that's because I got deep in my bag with this, because I said, bro, I know there's a way I can create a structured strategy that allows me to repeat the same process over and over again, where I don't have to have emotions in trading. I don't have to guess, right? There's no need in me guessing if I'm going to hold, or asking somebody if I'm going to hold or sell or buy. I've tested this out. This is legit. I've done the numbers. I've looked at it. It's real, right? And so if you're doing a manual test again, flip through different indicators, flip through different strategies on TradingView, TOS, whatever you're using. And I would say just run it back maybe 6 months and just see what makes sense. You can do stuff where you have stops based on time, right? I get in here, my trade automatically stops out minus 2% or whatever profit we're in 10 days, right? There's different ways to go about it. So I'll pop into the chat. See if there's any questions. If you have any questions, put them in the chat. I'll just Um, what's your favorite scalping intraday strategy for option trading forex? I don't trade forex, but Bain and Quiet Money kill forex every day. They're turning up on there, and Bain does have classes Sundays, 1 p.m. Eastern to 3, and then he also live trades on Wednesdays. So check this class schedule in the chat, and also look out for the links. And then of course you can just ask Bain, you can see what he's doing, learn that way. My favorite intraday scalping strategy is actually trading off the 1 minute chart. I ran a class on that last Friday. I taught about how I trade the 1 minute chart. Sometimes I'll trade the 5 minute, but lately I've been trading the 1 minute, testing strategies out on there. Only difference is it's hard to trade the 1 minute chart and call out a trade in the chat and take the trade myself and still have the same feel for y'all. So that's why I was trading live a lot. But I do like 1 minute scalping. The white bands or Bollinger Bands. Yeah, so I put up, for just an example of back testing a certain strategy, I did put up 2 pairs of Bollinger Bands, and I just changed my settings so that one pair was blue and one pair was white. So that way you can tell the difference, because we were looking at trading a strategy based off of entering on the 3 standard deviation Bollinger Band, but exiting off a 2 standard deviation Bollinger Band. And then for examples like this, actually, right, that strategy you would have closed out probably right here and missed out on this run up. That's when you can test out. You can test out stuff like trailing stops. You know, you can say, okay, I'm gonna have a trailing stop of 2%, right? So it's just tons of different ways you could test different things out. But you do want to test it out thoroughly prior to, trying to make sure it's a thing, right? What are the red horizontal lines support and resistance? No. So for this scenario, I think these weren't support and resistance lines. I was just marking an entry and exit. So I could have also circled it. All right, but I just kind of crosshaired it where I put a vertical line and a horizontal line on it. So no, these weren't to show support and resistance at that time. That's all the questions we got so far in the chat. And cool. So I take it most of y'all are like, bro, we are not that crazy like you. We are not about to sit here and manually back test all that. Please show us how we can do this a simpler way. Got you. So this is Profits Pie. If you've been in the chat for over a week, you've probably seen me mention it at some point. No affiliation, but I really like the website. I like the data. I like the access that you have with it. So this is the back testing portion. They do have other functionalities. They have a good screener where you can back test strategies and then screen off of the back tested strategy. But what I'm gonna show you is this test right here, test 337. I ran more than that. But this is a back test I ran. Notice that max drawdown, which is crazy. You know, the whole account is down 30%. Put in the chat, we're gonna back test the strategy. I've been doing it, bro. So the whole strategy did have your account down at 1.34% max drawdown. But what you see is that this strategy took $500 to start, and it went for 15 years, had a 70% win rate or 69.7% win rate, and ended up with over $1 million in profit and an annual return of 67%. Okay. Also point out that it's a very aggressive strategy that I tested, which involves putting the whole account on every trade. And that's what led to probably this big drawdown. But I did actually end up trading this strategy, and I traded it successfully throughout college. I was swing trading it, and it worked. So we're going to get into this strategy and breaking it down, and then also showing you kind of how you can do this, test this out. So look at the numbers. The strategy that I ran December 12th, 2018 at 3:06 in the morning. That speaks for itself. Right? So this strategy tested, right? We have our entry rules here, right? Buy, and I'll go over that in a second. Position sizing 100%. This is the return, Sharpe ratio, percent profitable. So it means we have 70% win rate. 1.48 was essentially our our actual win-loss profit ratio. Kind of think of that as like risk to reward in a sense. So for every trade, there's like a 1.48 on the top side, one on the bottom side, right? So like making a buck 50, risking $1 is kind of the way you can look at it. But it was a total amount of gains, 3 million. Total amount of losses was a little 2. So it's all laid out right here, right? And this having this allowed me to think, could I do this, right? I tested this strategy for 15 years, a 15-year test. Could I do a strategy that over 15 years, the most losses I had in a row was 4? That's not bad. That's not too hard on me mentally if I take 4 L's in a row. That's the most out of 15-year span. The most consecutive losses was 4, right? And you see here the average length of winning trades was 2.6 days. Losing trades, 6.85 days. At the time, I didn't know about options. Now what I'm thinking is, well, if most winning trades pop off within 3 days, then maybe trading options on this wouldn't be a bad idea, you know? Because I could have probably went and tested and said, okay, what if we close trades after 3 days? Most losing trades take 7 days. All right. So what if I close trades after 3 days when my average winner is 3 days? Maybe that'll allow for better win rate, more profit, right? Obviously, I can't run the exact same test now because this test was run almost 4 years ago. So the data is completely different. But when we get into the test, what you'll see here is, and we're going to walk through this. This site does have a cost associated with it. They have a free version, but I did pay. It's not a bunch, but I think it's definitely worth it. And that's part of like investing in your trading, investing in yourself. I invested in this when I really didn't have the money to do so, but I knew that once I found a strategy that worked, I would make way more money back than what I spent. Like I spent $75 to access this for a month and have all this stuff. So walking through the actual strategy itself and why it makes sense, I suppose, or how do you use this actual site? This is where you put your criteria in. All right. So what I'm looking for here is basically I'm saying the strategy is I'm going to buy when this stuff is met, right? So the stock needs to close under the 24 SMA, and you can come in and you can change things, right? Based on simple moving average, Bollinger Bands, volume. You can do stuff with technical analysis and all these things. If the RSI is XYZ, right, you can come in here and fool around with all this. And this site is helpful that they do have all these little question mark boxes that are going to give you more information about what this stuff is. So naturally, when you look at this as a beginner, this looks like a crap ton of random stuff. It is a lot of stuff, right? I don't know what some of these things are, and I've been doing this for 10 years. I don't know what a PPO EMA signal is. Maybe I do, and I'm just not thinking about it right now. All right. But needless to say, you do know what a Bollinger Band is now. I just showed you, right? You know what a MACD is. I just showed you, right? So there are things on here that you might be familiar with that you can test out. So don't get out of that. But that's simply what you do, right? You can set it up, less than, greater than, equal to, right? Let me put in these different things. I want the volume of this to equal this, right? So volume being over 40,000 is just saying that I'm not getting a little stock that never has any value. 40,000 isn't a lot, but for a strategy that's just swing trading shares short term, we don't have to be trading something with tons of volume unless you're going to be putting a ton of money into it. RSI 2, right? So this is a play on the indicator period settings, right? So just like I had the Bollinger Band up, and the Bollinger Band normally is a 2 period or a 2 standard deviation, right? This isn't what's going on here, right? So in this instance, I'm using, instead of a 14 period RSI, I'm using a 2 period RSI. And I'm saying I want to find stocks that have less than 5 on a 2 period RSI, right? So I'm going to actually show what that looks like so you can get a visual to go along with it. So this is a normal RSI. I do have the SMA on right now. Take that off. So this is like a normal RSI, how it looks. Standard setting is a 14 period RSI, right? What I'm saying is instead of 14, let's go 2. Okay. A lot more whips and all that. But what I'm also going to do is say, let's look at only when it's Fab 5. So give me a second to make sure I set this up right. Usually I know how to make it so I can kind of hide a bunch of stuff. Right now it's throwing me off a little bit. No big deal. What we're gonna do is do like that. Cool. All right, for the sake of this, we're gonna make it 10. And then we're gonna change this to 100, cover that up. All right, cool. So we made it 10. All right, so now we can see these little points under here, right? So this is really it. Like this will be part of that. That part of that trigger would be it has to be at one of these lower points, right? It has to meet the other criteria, but it has to be at one of these lower points as well. And so we just kind of look at where these lower points are. We can see, that on its own, sometimes that does follow or get followed with some quick pops back up, right? So that's what it looks like in actual chart, right? Let's keep it rolling. Then we have a close greater than the 197 SMA, which is similar to the 200 SMA, like I just showed you. And this was just a matter of me coming in here, running a test, and then I'll just come in here and change the number. Okay, cool. Let's look at 195, 194, 193, 192, 191, right? Because obviously, as you go, it's going to adjust the stocks that meet the criteria. The same stocks that are above the 197 SMA aren't going to be the same stocks that are above the 180 SMA. Some stocks aren't going to make that cut, right? So when you look at that, you come down here and you can set up the different actual structure, right? So maximum positions could be 4, but since I put my position sizing to 100% of the account on every trade, this doesn't matter, right? We're going to be in just one position at a time. You base your positions off of RSI2 being the lowest, and of course you can come in here and change that. Whether it's the lowest cost, whether it's the one with the highest volume, play around with those settings, right? So basically, you just fill all this out, how you want the thing to go. What's the strategy? And this is helping you create a rule-based, strict strategy. All right. Here's where you can choose what actually what you're going off of. Are we going off of just SPY? Are we going off of SPY and Microsoft? Do you have a watch list that you put into the website? So all in all, that's pretty much how you would build that out. It is something you kind of got to go in and play around with, yes. And then I have a sell. I have one sell criteria, which is when we get a close greater than the 5-day moving average, we get out, right? All these criteria for me to buy, this is my one signal to sell, right? And these are the results, and so I can run it now because I'm not on a paid plan anymore. It's not going to give me, all the deep data. But you see right now, if you've been trading this over the past, I believe it's 60 days, this would have been a losing strategy. All right, past 60 days, this wouldn't have worked. Of course, the past 60 days, we also know the market's been dropping horribly. All right. But we see the same sort of thing where the winners are short. So I'm just going to run it just for a second. If you have questions, put them in the chat. I know this is a little more higher level in a sense because it's a lot deeper, requires a lot more work. So this is really just for those people who are like, yo, I'm gonna figure this stuff out. I'm gonna I could take this once I learn this strategy. I could just write it on a piece of paper and give it to anybody. But for those who want to get deep in their bag and love looking at numbers and figuring out the best way where they can trade themselves, because when you backtest a strategy and you find a successful strategy, you don't have to talk to nobody about nothing, bro. You can or talk to anybody about anything. You can really just go yourself and say, okay, cool, this is my strategy. And that's what I did, like I said. So Put questions in the chat if you got them. I'm just running another test. See what happens if we drop the time in trades. Looks like it really didn't make much difference. So, but this is the website that I ran a ton of back tests on. As you can see, I ran well over 300 back tests. I ran a lot more than that, but I deleted a bunch of them. But yeah, when you test things out, you can play around the position sizing to see what the account growth would look like or the account decrease would look like. You can set stop loss, you can set take profits. You can do all those things, right? Stop loss, 2%, 4%, right? You can come in here and change all those types of things. Run it and just see what you do, right? And that's this one strategy. So you can come in and you can test different stuff. You can test moving average crossovers. You can test buying RSIs on different stocks when they reach different levels, right? So again, I'm gonna check the chat. If you got questions, put them in the chat. I don't see any questions in the chat. But again, this is where if you wanted to actually come in and say, yo, I want to see, I'm gonna do a simple one. So let's say anything that's, my watch list is composed of, so this is one that just has a lot of stocks with weekly options. So let's just say out of my watch list, we're gonna buy when the RSI crosses above 50 in the last candle. And we're gonna sell when the RSI crosses above 70. Let's go 70 and let's go 30. So RSI is crossing above 30. That means that we're now starting to see a reversal on the RSI. Right. This is just $1 million account. Right. I'm not about to change all this. But just to show you like running a simple test. So look at this, right? This obviously turned out to be a strategy that would have lost, right? You'd be down $34,000 if you were trading a $1 million account following this strategy, this position size. Okay. So this is what you would do is you would come back and you would say, okay, cool, right? And it might have something to do with having a stop loss of 5%, 15% take profit, right? But you can come down and say, okay, what if the RSI crosses 20, right? Last strategy lost us 34,000. This strategy, look at that, profit, $900 in profit, right? But so we just tested this one. So we just tested these two strategies, and all I did was change one number, right? But this strategy ended up profitable by a very small amount, but just looking at the fact of the matter, right? Profitable by $900. Max drawdown was 7%, just about. Both of them had a bunch of losing trades, right? Very low win rate. But this one lost 35,000. This one made 900. So that's what you would do if you're gonna run a back test. Is you could just come in here and you could do that. And when you find a strategy that works, let's go there, right? Then you can take that and carry it over. This only took 3. This didn't take any trades. Let's do this. All right. So I'm gonna go ahead and go over to another back testing strategy or another back testing software or website that you can use. Put questions in the chat if you got them. I know back testing isn't all fun, but it seriously helps you eliminate emotional trading because you literally have a rule-based strategy that you know works historically. All right, this one would have been a loss. So that's that. I'm pop in the chat. Could I do it for SPY? Could I share a strategy for SPY? you need a simple strategy to start with. That's what I was just showing you, right? So if you're gonna be doing manual, you could do something like I showed you with the Bollinger Bands, right? Where if I wanted to test strategies on SPY, this is what I would do. Jourdan, what would you do? This is it, right? I could say the same thing, right? I'm gonna put a Bollinger Band, and let's put a moving average on there. And this could be the starting point, right? It doesn't have to be super complicated, but that comes when you keep trying to maximize it and continuously make it better. So I'm gonna say, all right, cool. I'm only buying when the when SPY is over the 200 moving average. So that's bare minimum first rule, right? So what that means is that this is all buy zone, but once we get over here and SPY is under 200 moving average, like none of this stuff would be any buy signals. No buy signals are here because my strategy requires SPY to be over that 200-day moving average. Right? So anything right here is not getting bought. So we can just go ahead and get that out. We're not buying anything right there. Why did I do that? Okay. So we're not buying anything right there. I keep putting the candles there and back, but that's kind of the gist of it. So instead, what we're looking at is, hey, I'm gonna buy when it comes down to the lower Bollinger Band. I'm gonna sell when it touches the upper Bollinger Band. Okay, it has to be above the 200-day moving average. All right, cool. So we're not buying over there, bro. So in that case, we say, okay, where would I be buying at? You buy once here, right? You could buy here. You could buy here because it came below, right? You could buy here. So you can lay out your entry points here. All right, you could gather those price levels, but then you look at your exit points as well. So you say, okay, if my entry is a lower touch of the Bollinger Band here, my exit is a touch of the upper Bollinger Band, then that might mean I'm getting in here and then getting out here, right? 4 days, $11. That's a really nice gain on an option trade. And that's test number one, right? This is just me kind of eyeballing, but realistically, you would actually come and get the actual number, right? You would look here, come look at these numbers up here. You'll say, okay, so if I bought at the end of the day, I would have bought around 410.87. And if I sold when it touched the upper Bollinger Band, then for this one, I would have sold around 421.30, right? Or 421.40 or close, right? So you can do it with this one as well. And so that's what you would do is write that down, calculate your ROI. That would be one win, one trade. So you have a 100% win rate so far. And your gain was 2.9%. And then you would do it again, right? You bought here, you sold up here, right? That's a win. 2 wins in a row. What's the percentage win? What's the gain, right? So you literally just track that out. And you will see, is that a viable strategy? If I did that strategy for 1 year, what would have my results been, right? And you can come back and you can tweak stuff. You can come back and you can say, okay, what if I included when it was below the 200 SMA, right? You could do that. And you can say, if that's my strategy, then I would have bought, you would already bought here, you would still be in it. So you have to create some sort of exit strategy. But that means you would have been possibly buying here as well, or you've been buying here, here, right? So you would have still just been buying into more downtrend. That's the point of having that 200-day SMA, is to help you avoid buying in a downtrending market, because you would have bought here and just been riding this wave down, right? So you're putting stuff into your strategy that's going to help you avoid more losses. If I know that buying a stock that overall is going down is going to lead to more losses, then I'm going to set up a strategy that keeps me from doing that. So if I'm swing trading, I bought Roku because I know it's been going down like crazy. If that's my strategy, then since September of 2021, I haven't had any buy signals for a swing trade on Roku. And if you look at it and you see it's in that downtrend, you see that, yeah, you could have made some money some places. You could have made some money on this little pop right here. But overall, these moves down is where the real money would have been made if you were trading appropriately. So trying to capture this little move here is minuscule and pointless compared to capturing this huge move here, right? And that's why we focus on setting up stuff that makes most sense. Yeah, you can catch this little pop here, right? You catch that little up move. Technically, yes, you could, but it'd be more advantageous for you to catch this move down, right? And so vice versa. We're seeing something that's in the downtrend. And so naturally, something that's in the uptrend would be the same sort of deal, where we're in this uptrend. Yeah, you can catch this move down right here, right? Cool. Could. But there's a lot more money in this move up. And it's more likely to have that move up because it's in an uptrend, right? So there's your simple example of a manual back testing strategy you could use on SPY or, well, this is Roku. But you can apply these things across different stocks and see what your results are. It was one other side I wanted to show y'all, actually. So cool, that's that. All right. This is Cmlviz, another site that I've talked about before. This also has a cost associated with it. They have a Cmlviz, I want to say it's Pro. We'll look at it since we're on the website. But here's an example, right? So CVS is the stock, and this is saying that there's a bullish diagonal trigger on CVS. You can read all this. This is recent today. This is today's date. And they ran a back test. They have stuff that's automatically running. And so what it's telling you is it's going to show you what would have happened if you traded if you bought an out the money or at the money 50 delta call option, 14 days to expiration, and you sold an out of the money 30 delta call with 7 days. All right, so you're setting up a diagonal spread here. And this is going to be 14 days before earnings. Okay, and that's it. All right, so here's the information. You can close it there. If you close the trade 1 day before earnings, you open it 14 days before, you set it up like this, right? And the stock is above the 50-day moving average. Scroll down, scroll down. These are the results you would have had, all right? So if you did this the past 8 times that this would have been met, so stock above 50-day simple moving average, you're opening up this diagonal spread 14 days before earnings and closing it out 1 day before earnings, you would have won 75% of those trades, right? Won 6, lost 2, and your total percentage return would have been 132%, right? So that's a strategy that's been tested, and that you see this and you say, okay, so I know this strategy has a 75% win rate the last 8 times that if I traded this strategy, I would have had a 6 wins, 2 losses with this amount of gain. Right? This is something I can do. I'm gonna pull my calculator out real quick. Total return of 132% divided by 8 trades. So the average profit on this trade, if you break it out, would be about 16.5%. Right? So that's not something that we normally would be like, oh my God, that's crazy. Then again, you're setting yourself up for a trade that lasts 13 days and averages a 16% gain. If you're somebody who's working full time and can't sit here and day trade, but swing trading is easier for you or better for you, then that might be something for you to take advantage of, right? So that's something you can do. In this site, you can run a bunch of tests on here. So I'm gonna go ahead and pull up this so we can just look at it. So they have a bunch of different things here. And I believe this is Trade Machine is the one they use for just stock back test. Oh, sorry, option back test. There we go. Trade Machine Pro. This is Trade Machine stock. The Trade Machine Pro is where you can actually do option back testing. They're saying, if I bought this option, this delta, this theta, whatever the case is, right? You can build that out, and you can see what happens with that. So this is Cmlviz. I would say, check that site out if you want to do some looking into that. And it does have a cost. I think it's $150 a month. I'm gonna go ahead and show y'all and pull it up. Okay, so it's $130. All right, so it's $130 a month. They say they have a 30-day money back guarantee. Right. So for somebody who says, yeah, you know what, it would be pretty cool if I could just go in here and test, what certain option strategies would have done, certain spreads would have done. If I bought at the money Apple calls every time Apple hit a RSI of 30 and I closed it in 5 days, what would have happened? Okay, that would have been a good strategy. Well, now I'm gonna set an alert on TradingView to alert me every time Apple goes under RSI of 30. I'm gonna go buy some at the money calls, right? So this is where you can come fill it out. Again, no affiliation. I don't know these people. They're not paying me to talk to y'all about them. But I'm trying to put y'all on. So take it if you want to take it. And then the last side I want to show. Again, if you got questions, put them in the chat. We're looking a little light on the chat. Is TradeIdix. So this platform has a bunch of stuff in it. So today we're focusing on back testing. Maybe one day I could just do a whole class on this website. But today we're going over back testing, right? So let's pull up the back tester. So what I liked about their website is, unlike the other two I just showed you, and you do a manual back test, you can do it. This one, you actually can test out different time frames, right? So you can come here and say, let me look at Zoom, Apple, PayPal, Nvidia, Facebook, SPY, 30-minute time frame when the RSI is less than 25. It's my buy signal. What's up, Kia? The first website I mentioned. So I showed a walkthrough of TradingView, manually back testing, Profits Pie. I'll put the links in the chat for y'all. If I can get this little Zoom panel to move. I'll put the links in the chat. So this is Profits Pie. Again, Profits Pie does have a free version, but to access 15 years of data, it does cost, but you can play around with the free version because why not? This is Cmlviz.
Jordan, everybody too. You can also, when he has his screen up and it's showing it to you, you can take a screenshot. I didn't know about those things, and I took a screenshot.
Thanks for the ad, Moody. So
stop that.
And then this is TradeIdix. TradeIdix does cost as well. All right. So we can run that where you have a strategy that's basically a RSI under 25, and then my sell strategy could be RSI, just for simplicity's sake, greater than 60 on a 30-minute time frame. Let it run. Cool. All right, so it's showing us based on these stocks, 30-minute time frame. And I believe TradeIdix pulls from the current year. So like a year-to-date back test, I believe. It's not even showing everything else back here. So I believe it does pull year-to-date, even though I'm not seeing it. So it might be a 3-month. Now I'm looking at it, May 27th, 2022. This is March 22nd. That's 2 months. All right, my math is off sometimes. Don't worry about that. Don't put it in the chat either. But what you're gonna look at though is you're gonna actually see, what the entries and exits would have been. Like see win rate, see what would happen if you bought and hold, your total profit percentage, average profit, profit factor, which again is basically looking at that like risk to reward kind of status. And then what I liked about this was you can also look at what stocks made up for that did it the best part of the P&L. So we see this strategy with PayPal, horrible. Nvidia, 5%, right? So then what I would do is, what I did do is I came back and I said, okay, Nvidia did good. Let's look at AMD, Cat, Snap, Twitter, Neo, Plug, Lockheed Martin.
Yo.
What's up, Jeremy? Glad to have you, bro. So run that. Oh. And here's like a nice point to look at. Winning win percentage, 59%. Total profit, bad, right? Do I know any bots that you can plug in these strategies to execute? DM me that on Instagram. I know there's a couple of auto traders that gets a little deep. DM me on Instagram. Stuff gets a little deep. We come here, and so you could literally just run this over and over until you find some stuff like that has great success with this. So that's this website, and that's really the bulk of it. So we covered manually backtesting strategies using indicators. You know, you can use price stops, you can use time stops, you can use percentage stops. 2% I'm out. To the upside, 1% down I'm out. Indicator stops, Bollinger Band, MACD, RSI. Cool thing about TradingView is they have a bunch of different things on here that you could try out if you wanted to try out. They also have a lot of strategies, and the strategies, what's pretty cool about that is the strategies will actually give you buy signals and sell signals majority of the time, like you see up here. They'll give you those, and then you can actually see the performance, right? And you can go in the settings, you can change things and adjust stuff. But you can actually see the performance. You can see the list of trades that would have been taken from the strategy. And then you can put the indicator on your chart. And if you decide to trade that strategy, you can do so, right? So that's something else that I did is I put a bunch of different strategies up here and I looked at them and saw how they perform. And just kind of tracked that. And just got ideas for certain stuff that could be successful, could not be successful. But you went over that. Profits Pie does cost to have an account on here. They do have a free version that does allow you to backtest, so try it out. They do have a ton of education on here as well, just kind of like basic education going over chart patterns, or candlestick patterns, indicators, and what certain indicators are and what they mean. And then we went over Cmlviz, which is a site that does have a product for $130 a month that allows you to backtest options. Profits Pie, I think their highest price point, unless it's changed, was $75 a month. And that gives you access to backtest over 15 years worth of data. And then Tradeics, not sure how deep their backtest goes. Looks like I got 2 months of data or so here. Can I type my Instagram account? Yeah, bro. If somebody DM'd you asking you how your trading is going, it's not me. If somebody followed you, it's not me. If you followed me and then got a follow from somebody else and they DM'd you about your trading, it's not me. There's a lot of scam accounts of me out there, but not me. People just try to, scam people. I don't got time to answer for that. Tell them quit being weird and to get a life. So that's it. That's the back testing. If y'all got questions, Q&A, we can go ahead and get that knocked out. And that'll be pretty much it for me. I'm gonna stop sharing my screen. If y'all got questions, I'll let you, boy. I'm always here. You can unmute, you put them in the chat. Yeah, they don't have any questions. Hey, look, I'm in Cancun, so if you don't have questions, that means I could just go to the bar, go get some food. So no questions is fine with me.
I think I found a strategy.
The Tesla?
So pull up the trendy site again. So I found well, let me see what this is. So 20%. But I don't know. See with trendy, I don't know how much. The only thing I don't like about it, this one, you can specify how much you put in.
Two other sites that I.
So under buy, if you change that, so let's leave those same stocks, right? And then under the buy, we're gonna play off support and resistance. So under the buy, we can do a breakout. So we're gonna buy when it breaks above resistance, and we're gonna sell when it falls below support. So break down. And let's leave that. Let's see what that looks like on the 30-minute. I did it on the 15, but we'll see what it looks like on the 30. Ugh, I don't like that. Change it to the 15-minute. Also, probably those stocks, those stocks probably suck.
Everything for it.
Let me see what let me just put Tesla in there and see what that one looks like.
It was two more sites I had.
Yeah, Tesla, that sucks for Tesla. That's a nasty one.
That.
All right, so I put in sites. Yeah, those are crappy stocks. That's why. I got SPY, Nvidia, Microsoft, QQQ, and Tesla. No, hold on. You got SPY, Microsoft, QQ, Nvidia, Tesla, and you probably did a typo in that last one.
Oh no, I did Boeing and Chipotle.
You said what?
I did Boeing and Chipotle too.
Oh, Chipotle. So yeah, that's a better one.
Hey, all finished great. What is this? This is one.
What stock? What is it?
This is the Boeing trades. This is the Chipotle trade, so it's not that. Microsoft, it might be this Microsoft entry. It might be part of this that's still running. NVIDIA.
Let me do Microsoft by itself.
So maybe it's counting like this run up, but it hasn't counted it because it hasn't closed the actual trade.
I'm working on Tesla. I don't care about nothing else.
It was two. I gotta stop sharing my screen. It was two other. I gotta go find these. It was two other websites I had. If I can't find these other sites, then I'll just go ahead and record it. So post. Here we go. So I'm gonna show y'all another site real quick. Then I'll stop the recording. We can keep looking at Tesla a little bit. So this is a site called Streak World, which in my deep dive of strategies and searching for strategies, came across this website, streak.world. So they have some stuff already set up. I'll just go look at this site and play around with it. They have some back tests that are already set. They have some algos, some scanners. I haven't really looked at too much of this. It seems like you can hook up certain accounts with this as well and potentially auto trade. This looks like it's pretty much all crypto. But come to my algos. Yep, here you go. You could set up strategy and test the strategy. And this one you can do, you can use the time frame as well. Right, so you can do like a 1 hour time frame, put your stocks in here. I got Tesla, SPY, Amazon, Shopify, and Deere. All right, and this is a EMA, Bollinger Band. Got a 1%, got a 1% stop loss, 2% take profit. You can run the test. Okay, so clearly I did something wrong here. This one took 5 trades, so maybe it's because of the SMA. All right, but this is another site you can go on and fool around with, test stuff out, see what comes up. That's why this is. So with that being said, any other sites for options back testing? I haven't come across any other options back testing sites besides the one I showed you. So if you have any, put in the chat, but that's the only one I've come across and used. Every site that I showed you, I've used personally. So any other one, I don't know. Go ahead and stop our recording here.